right, well, let's kick off the webinar. Welcome everyone to today's webinar. This is the first event hosted by World Green Building Council's new Sustainable Finance Taskforce. And I'll have my colleague Stephen, who's on the webinar today, introduce this new work stream to everyone. So today's webinar, as you will have known when you registered, is on green money for green buildings. So we will explore some of the tools available in our sector to finance the transition to a sustainable built environment. I am Julie Emmerich. I'm the Sustainable Finance Lead at the World Green Building Council. I recently joined the team to kind of bring the perspective of sustainable finance to the activities, existing and upcoming activities of the World Green Building Council. And as a network, I bring together the Green Building Councils and also our partners to drive industry and policy action on sustainable finance. I will share with you today's agenda, but maybe first I'd like to say that everyone has access to the Q&A function. So you're also welcome to ask questions along today's webinar, and we will pick them up throughout the session. So there will be some Q&A after each panelist's presentation, but also we'll have some more room to have Q&A towards the end of this webinar. So today's agenda, when I'm able to switch, here it is. So the next hour and a half, we'll discuss, as I mentioned, available tools and practices to bridge green money with green buildings. I'll shortly be handing over to Stephen Richardson, who is the Director of Europe in the World Green Building Council, to introduce some of our work on sustainable finance. I will then hand over to Chris Trott, who is Head of Sustainability at Foster & Partner, sorry, and who leads a team that guides projects and aspects of social, environmental, and economic sustainability. So we'll hear about Foster & Partner's activities on kind of greening design, building design. We'll then move on to hear from Jana Bauer from the activities and the guidance that the European Public Real Estate Association brings to its members. And their member base is representing 790 billion of euros of real estate assets. And Jana, specifically the ESG and advocacy manager, so looking at strategic policy advice and also advocacy, improving the position of listed REITs, or real estate investment trusts, on various policy initiatives and legislations. We'll then move on to hear about green certification, green building certification, from Hanan El Hayek, who is the head of sustainable finance at Certivea. And Certivea is the certifying body from Alliance HQ GBC. And Hanan is a sustainability and climate change expert. And she's working on ESG strategies in the real estate sector, and will tell us some more about the experience of Certivea in aligning the green building certification to the EU taxonomy. And as I mentioned, towards the end, we'll have a Q&A session where everyone can bring in their questions. So please be active. I will then hand over now to Stephen Richardson. Please go ahead, Stephen.
Thank you, Julie. Good morning, everybody. Welcome wherever you're joining us from. It's great to have you with us. So yes, I will give you a short introduction to the, if you like, the backstory of how World Green Building Council came to launch this Sustainable Finance Taskforce and this work stream. So if you could flick on to the next slide, please, Julie. Very briefly, I'll just give a bit of information about our network for those not so familiar with us. So World Green Building Council has now 77 members across the world in 77 countries. National councils all working on accelerating the transition towards a sustainable built environment. We work with more than 60 partner organisations who support our work in different ways. And across those 77 councils, which are grouped into 5 regional networks that you can see here, they have a combined membership of around 46,000 organisations right across the value chain. So our members represent the finance sector all the way through professional services, construction companies, developers, and the supply chain as well. So a very broad member base across the world. And as Julie said, I'm director for our Europe network, so I coordinate the work of the Green Building Councils in Europe. And on the next slide, there's a little bit of information about the task force. So the task force was launched with a group of our Green Building Councils, those who've sort of opted in to be part of this work. So we have 26 of the councils around the world participating actively. And we're supported by 3 founding partners, Saint-Gobain, Foster & Partners and Skanska, and very grateful for the support that they're giving to us, both in terms of, obviously in terms of the financial support that they give us, but in particular for their expertise that they provide into the task force. And great to have Chris Trott from Foster & Partners with us today. The next slide just sets kind of a bit the context for this work, and I quite like this analogy, sort of the flow of money being a bit like a river, and as we all know, the river will sort of take it'll always flow downhill, it'll always take the path of least resistance, and I think my observation is that money does the same. And actually, when we compare our sector, the built environment, with some of the other sectors out there clamoring for investment, particularly green investment, actually our sector has quite a lot of resistance. If you look at where capital flows when it's coming from green investments, it tends to flow more easily into renewable energy projects, even into electric vehicles and this kind of thing. So there are other sectors where it's easier for the money to flow, and so it tends to take that route of least resistance. And one of the reasons, or that is one of the sort of fundamental reasons why we set up this task force, was to try and remove some of that resistance, to break down some of the barriers, to enable more capital, more green capital to flow into green buildings. And we'll be hearing today about some of the tools and approaches that different organisations that we partner with are taking to remove those barriers. Next slide, please, Julie. So we, in Europe, we have 15 of our councils working on this agenda with us, and specifically a big part of that work is focused on the EU taxonomy. I'm sure many of you will have heard of that. Possibly some of you are very actively working on it. So that's a big part of our work in the task force, but it's not the only part. There is work on a sort of international scale as well, and I'll come on to that on one of the next slides. If you could flick on again, please, Julie. So just to situate this work within our wider strategy, so we have a strategy that's built around the SDGs. So we did a mapping of the SDGs to see which of those are most impacted by the built environment. Where do we have the most opportunity to drive forward that agenda? And that has then sort of informed our strategy, which is framed around these 3 core areas, these 3 pillars of climate action: health, equity and resilience, and resources and circularity. And across those 3 areas, we drive change as a network through a number of different impact pathways or different actions that green building councils take to drive change. So a big part of what we do is convening in collaboration. We do a lot of advocacy work. There's the certification schemes, the rating tools that green building councils run. And then green building councils do a lot of communication, awareness raising, training and innovation programs. But increasingly, over the last 10 or 15 years, we've seen green building councils working more and more actively on this theme of sustainable finance and the invest part of our work. So we've launched this task force to formalise that a bit more at a global level, and to bring a bit more structure to that work program in terms of our global and regional work, building on what GBCs have been doing locally. If you could go on to the next slide. Just to give it a little bit of a history, this is not a new topic for most in the network, even though the task force is relatively new. We've seen green building councils have been working on and enabling green finance in the sector for more than a decade. Some of the earliest green bond frameworks referenced work done by green building councils. And at World Green Building Council, we've built on that expertise over the last 5 years or so, working in Europe, at least, on initially on energy efficient mortgages, and then building on that to then take on a role in supporting the development of the EU taxonomy with the European Commission. And that through that work, we've recognised more and more, and we've heard more and more from our network, from green building councils and from our corporate partners, that there's a real need and a real opportunity to do more. And that's why we launched the task force, to give our network more, as I say, more structure, but also more resource to work on this important topic. Next slide, please. So the task force has these 3 objectives. We want to work at a strategic level on ensuring that there is an exchange across the network on the opportunities and risks of the sustainable finance movement for the built environment, and facilitate that discussion on how to address and how to support the financial sector in shifting more capital into green buildings. We want to connect the two worlds, if you like, the finance sector and the built environment. We often hear how these two sectors speak different languages, and part of the role that we see for this task force is to provide if you like, a translation service to allow better communication between the two, to allow more interaction and more collaboration. And we're also wanting to convene, so to bring together the different stakeholders to allow that dialogue and to foster more of the collaboration that's needed, and support both our green building councils and their members with technical expertise and technical guidance and resources. The next slide, please, Julie. And within the task force, we've set up 2 working groups. So there's a working group looking at the sort of global scale at voluntary ESG frameworks, but we're particularly focusing now on our work on the EU taxonomy. We have a working group that's addressing that specifically. So we are looking to build capacity within the industry to work with the taxonomy. We see there's a lot of uncertainty and confusion in the market, and we want to try and help address that and bring more clarity. We see a need to build consensus. There are different interpretations of the taxonomy emerging in different markets. We hear that through our network, through the councils in Europe that are working on this. And so we want to provide a space to build and align interpretations rather than seeing sort of more divergence. We want to try and converge those interpretations as the taxonomy was intended to do. And we want to work on building the influence of the sector and of our network in this space to ensure that our voice is being heard in the work to evolve the taxonomy and to build it out over time. So that's a big part of what we want to do. And I think I might have 1 or 2 more slides if you can click onto the next one. Yeah, so yes, final thing I want to end on is to just announce an exciting new development that we're really pleased to be working directly now with EPRA. We have Jana on the call with us today. You'll be hearing from her in a few moments, but wanted to take the opportunity to explain a new collaboration between World Green Building Council's Sustainable Finance Taskforce and EPRA to specifically address some of the really sort of on the ground issues that we hear are holding different companies and businesses back from being able to really grapple with and engage with the taxonomy. And if you could bring on the next slide. This partnership will provide a number of really important resources to the market, specifically addressing these three core areas that EPRA and we have identified as being very urgent needs for the market to understand better. So firstly, nearly zero energy building definitions. So the taxonomy has a criterion for climate change that buildings should be, new buildings should be constructed to be 10% better than NZEB. But what does that mean? And we see a lot of confusion in the market on how to interpret that, how to calculate it. So we want to provide some clarity on that. We want to look at national EPC methodologies. Again, for acquisition of existing buildings, there's a threshold applied around EPC level A, and we want to ensure that there's clarity on how that's being interpreted, because there are different EPC methodologies in different markets. So you see different performance levels relating to that A label. And then finally, we also want to look at the major renovation definition, which is another a particular term in EU legislation that taxonomy references. But again, there are some different ways that is defined in different member states. So we want to provide more clarity on that aspect as well. So we hope that those resources that we will be developing jointly with EPRA and promoting with EPRA will be a really valuable addition to the market's ability to implement a taxonomy. And I think that may well be my final slide.
Yes, it was. Thank you so much, Stephen, for introducing this whole new kind of work stream at the World Green Building Council. I will then hand over now to Chris Trott, Head of Sustainability at Foster & Partners, to tell us more about the or how Foster & Partner addresses the kind of environmental challenges using environmental evidence such as planetary boundaries to make or to inform green design choices. So please, Chris, the floor is yours, and I think you have some slides to share.
Thank you, Julie. So I hope you can see that presentation now.
Yes, we do.
Okay, so a few of my remarks I will try and link back to what Stephen has said as we go through. So it's a pleasure to be with you today, and I'm going to talk a little bit about our design efforts in a global context at Foster & Partners. We're a global integrated design practice, best known for our architecture, and are active in many countries throughout the world and in all the geographies that the World Green Building Council are active in as well. So very briefly, there will be no surprise to you that there are sustainable development goals, and my first slide sequence is really about the things that are the same for all of us, irrespective of where we are in the world. Stephen's already mentioned that one of the problems of the built environment is it's a very heterogeneous sector. All countries have different approaches, all buildings are different, all clients have different aspirations, which makes it difficult. So our approach tries to find the things that are as common as possible to build on. So some of the commonalities, the IPCC, of course, report every 4 or 5 years on issues around global warming, and more recently, the IPBES have been reporting on biodiversity and ecosystem services. And one of the first pieces of work that both of them have done together is to say that you can't solve the climate change problem without solving the biodiversity and ecosystem problem, and you can't solve the ecosystem problem without solving the biodiversity, without solving climate change problem. They are two sides of the same coin, so they have to be thought of together. This gentleman, who sadly passed away at the end of last year, great inspiration for many of us in this sector, Edward Wilson, has the half-Earth hypothesis or principle, and he has discovered with his various assistants and those working with him in collaboration that we need to leave half the world to go back to nature if we are to retain 80% of current species to prevent them becoming extinct. At the moment, only about 17% of the world is wild, so that's a real issue for us all. I'm sure it'll be nothing new to you to hear of Article 2 of the Paris Agreement, which now is aiming for a 1.5 degrees long-term climate temperature goal. And most of you will have heard of the need to balance sources and sinks, which is Article 4. So basically what that means is we have to reduce our emissions globally, and we have to increase our absorption. And that is entirely consistent with the principles I've already explained. So I'm just going to give you 3 or 4 slides on an approach which is based around the ecological footprint that we use. It's established science. It's been around for 30 or so years. We know the people who developed it very well. And in simple terms, this is a diagram of a little farm. And if this was your little farm, and it was 1.6 global hectares, you could live quite happily. There was carbon that couldn't be dealt with. Any carbon that you would generate in your normal lifestyle would be absorbed by that forestry. That covers your grazing, your fishing, built-up land, crops, and forestry requirements. So it allows for food. And this is a really important issue, that there must be space for all of those things, because if we don't have sufficient space for food, we chop down more trees to make more space for food, so we can't absorb planetary carbon. Unfortunately and sadly, we're in this position where we're trying to live with a 2.7 global hectares per person allowance. So we have inefficient ways of absorbing carbon, and over time we will run out of the means to absorb it. And it's because we can't absorb the carbon that's going into the atmosphere that we have climate change. So we are well out of balance with what nature can support. But we're all aiming to get to net zero by 2050. But unfortunately, by 2050, the rules change, because our little farm then will only be 1.2 global hectares per person, because we'll have another 2 billion or so people. So we've got to be even more efficient in the way that we use global resources in order that we arrive at a 1.5 degrees equitable situation. But then if we think back to what Edward Wilson was saying, we actually have to leave half of the world to go wild as well, because otherwise we're going to lose all of these other species that are around, which actually reduces that to 0.6 global hectares per person of natural resources available to support us. So if we take today's 2.7 global hectares and divide it by 0.6, which is what we need in the future, the revealing number is we need to be 4.5 times more efficient than we are at the moment in our consumption of natural resources, and therefore we have to drive carbon completely out of the atmosphere. That's very similar to the factor 4 that the Club of Rome predicted about 30 years ago. So for the last 10 or 12 years, we've been working with this responsibility framework of these 10 themes: well-being, community impact, social equity, planning for change, water, land and ecology, energy and carbon, mobility and connectivity, resources and feedback. They actually predate by a couple of years the United Nations Sustainable Development Goals, but they map very well to them. So what I'm talking about now is really the balance of social equity, energy and carbon and resources, and actually how to bring those into the design dialogue such that we can make the right decisions to get to the targets I've just been talking about. So I'm going to give you a little example, and the example is one of Axia owner Ombu, which is well written up in the WGBC's Beyond the Business Case report of 2026, and it addresses issues such as how is this a good financially stable investment for our client. It was an old factory building of 1907 vintage, a big hall when it was cleared out. Carbon's a real problem because it's very difficult to find carbon, to bring carbon down to net zero conditions. And as we grow up with it, we find that it has a very long shadow. So we have to look in many places for it, and we look across the whole value chain here of design prelims, structure, facade, services, fit out, future refurbishment of the building, energy, and the transport to and from the building of commuters. We also look at the finances of the building because you can't always find all of the materials, certainly for things like labour and plant, and therefore you need to understand the costs of those, and they can be related to carbon also. So our analysis of this building was done on the basis that we look at embodied carbon, we looked at operational carbon, and we looked at the ecological footprint, and concluded that with the design that we had, this was a 2 degrees of climate forcing temperature, which is what you get if you have a 1 planet balance, because the Earth can absorb all the carbon from the lifetime of the building. We compared it to a complete new build, and we compared it to a complete reuse of the building. We do reuse the whole building, but unfortunately we need to put more people in it than will fit in it. So we had to do a modest amount of extension. So we end up with around about 9.4 tons of carbon in comparison to 12.5, which is what we would have needed for a complete new build. And that's over 60 years for all the scope that I've shown you. We retained all of the structural roof trusses. We installed a timber construction in the mezzanine, and then we retained 10,000 tons of brickwork. That's the internal. That's the internal of the building. Now that it's finished with the timber, which absorbs carbon. This is the outside. You can see we've added considerably to the external part of the building in terms of its social impact and in how the local people can use it. This is the health and well-being aspects of the building being celebrated at lower level in the courtyard. So we've managed to reduce resource use. We've managed to conserve carbon and waste streams. We've managed to reduce climate change, increase vegetation and ecology and biodiversity, increase regeneration of other species, and increase value retention in the existing assets. At that point, I will stop sharing, and that completes the presentation, but I'm happy to take any questions that you may have for me.
Thank you, Chris. I will retake control of the screen in that case. Great. I don't see any direct questions in the Q&A. Maybe I will have one to you though, maybe on the scope. So it's great to hear on a, so to say, case study. How is though the overall kind of scope of how you apply, you know, what you presented? Is this something, do you take through the same process with all your projects, so to say, with the same considerations?
Yeah, we use this on all projects, and we compare all projects. And one of the reasons that we use this approach is it doesn't matter which geo we're in, the processes are the same, so it makes it easy to compare them internationally. So we now have very many of those. Something in excess of 100 projects have been evaluated in that way. The idea of the extended scope allows us to make different decisions as well. One of the things we found is that by including an allowance for commuting carbon within the overall analysis, commuting carbon can sometimes double the lifetime carbon of a building, depending on where it is. If people commute mainly to outskirts of cities and they do so in cars, then it's not at all unusual for that number to be almost double. The one I showed you is about 50% commuting by car and about 50% commuting by public transport. Now, what that actually does is throws an interesting light on the situation of transport-orientated development and density in city centres. So what we're finding is in city centres, you do have to work with more complicated sites, maybe taller buildings, and you have to invest more carbon in the building itself. But over the 60 years, that will pay back many times if you've got efficient transport and you've got efficient, and people can walk to and from the building. So one of the things I would always encourage is take a broad view of scope. Don't just take one part of the building like the structure, or take one part of the building like the facade. Look at the whole thing. Look at the whole lifetime of the building. We also include almost a complete rebuild of the building over its time in our numbers, in the refurbishment numbers, which is why our kind of carbon quantities are high. And what that does is it forces us to think when we first design a building about how the building will be refitted in the future, to make decisions now that will have an impact in the future. So I think, you know, my view on that would be, think about the whole timeline. Think about the practicalities of how the building is really used and is really going to be refurbished. Don't be shy if some of your carbon numbers are a bit higher, because you can win those back in other ways, but search for those ways to make sure that it can be happened. And we would certainly advocate thinking of the ecological footprint, because it will work anywhere. Of course, you will have to follow regulations in each country. That's always going to be a factor. But many countries are still well behind the curve when it comes to decarbonisation, and particularly a lot of the countries that we work in. So that's why we use that approach. Wide scope means wider understanding and wider comparability.
Great, thank you so much. I see some of the questions, maybe some we can take directly in the chat, some I will pick up towards the end of the conversation, but maybe one last follow-up question directly to your presentation is, can you provide maybe a bit more context on how you translate, you know, the temperature goal of the Paris Agreement in design choices?
Yeah, okay. What we have realized over, one, analyzing our own projects, and two, looking at projects which have previously been analyzed with ecological footprint, and it's about getting that carbon to disappear, which is not available for us to sequester in the long term, is there's a correlation. If you take the 2 degrees centigrade target as being one planet, there's a correlation between that and climate forcing temperature, because one planet equals 2 degrees. And if we then plot out other projects that we've done over the last 5 or 6 or 7 or 8 years using this particular approach, we can see that a project with 3 or 4 planets ends up at 4 or 5 degrees centigrade. So that correlation seems to be pretty clear and pretty strong. So as a first approximation, the climate forcing temperature of a project is equal to its ecological footprint in planets plus 1. That's kind of the kind of simple correlation. I could show you the graphs that vary that very slightly, but that's, you know, to all practical intents and purposes, that correlation is good enough to make the right decision. It might not be perfect, but the science will never be perfect until it's too late. It just needs to be good enough to make the right decision at the right time, and we're confident that that's what it exposes to us.
Thank you so much. I'll pick up some of the other questions at the end of the webinar. I will now hand over to Jana Bauer from the European Public Real Estate Association, and she is the ESG Policy and Advocacy Manager. So please, Jana, tell us a bit more about the perspective of the real estate sector that you represent.
Thank you very much, Jolie, for the introduction, and of course also for the invitation to the webinar. I think you will be operating my slides, so I will try to navigate you, and we can also skip this one and go straight to this one. As I will talk today about the role of the European taxonomy in driving investments in a sustainable built environment. And later I will also talk about the role of EPRA, European Public Real Estate Association, which you kindly introduced as well, in supporting the sector, the listed real estate sector, with the EU taxonomy application. But of course, before we go there, let me quickly explain the role of listed real estate in advancing sustainable investments, and to explain a little bit about the sector. Can move to the next slide, please. Thank you. Because when I want to talk about real estate markets, I also want to mention that the EPRA's mission is, as an organization, is to promote, develop, and represent the European listed real estate sector. Often that sector is not well understood within the context of policy making. So we do a lot of efforts to make sure that the sector is understood correctly. It is explained, and a lot of information which I will be talking about today will apply mostly to the listed real estate sector, although a lot of it will be universal to the real estate markets, but I will do pay attention to where the differences are and highlight them for the participants. When we highlight to our stakeholders, which in my case is mostly the European policymakers and of course our partner organizations such as yourself, what I need to stress initially to them is that built environment is really fundamental to everything that we do in Europe, right, and elsewhere. It is where we live, where we work, where we study, where we heal in the healthcare sector, of course, where we produce, and the list goes on and on. And this sector not only caters to Europe's most essential economic and social needs, but of course is very essential to our journey towards decarbonization. It cannot happen without real estate being on board. So as Stephen mentioned, of course, it's much easier to drive investment to renewable energy, but it is very important to drive the green capital to the real estate as well. So on that journey, when it comes to listed real estate, it has a particular potential because listed property companies and REITs, they can access capital more quickly as they are listed on stock exchanges, and as a consequence, they can also scale up decarbonization efforts a little bit faster, I would say. If we move to the next slide, we will see that it is the role of the stock exchange listing that has that makes the listed property companies accessible to all types of shareholders, whether it's a large pension fund or an insurance company, or it is me or you, people on the street, I would say. All of these investors can participate as stakeholders in listed property companies when buying their shares, and also they can engage with them on their business strategies, and they can also ask those questions about where they are heading and what they are wishing to, how they are wishing to transform their business and real estate which they own. On the next slide, we will see how much of capital is still needed to renovate the European real estate stock. I'm not going to even say that number out loud. It's not insignificant, and therefore, access to green finance and ability to scale up such an investment is really very important on the journey to transform Europe's economy. We can move to the next slide, and I will start elaborating a little bit on the role of the EU taxonomy in driving those investment in sustainable built environment, because this was designed by the European policymaker as a tool to really connect finance and sustainability. And it is not always easy to connect finance and sustainability. It's also something that is being built up from the scratch. So I found your work on the Sustainable Finance Taskforce very essential, to build that capacity for the market to start applying it the way that it should. So that's well done to World Green Buildings Council. If we go to the next slide, I will just highlight the few objectives of the EU taxonomy, which is really to help investors and companies to determine what is sustainable, it is supposed to be a common language to really help us identify what it's supposed to be considered as a sustainable investment, so that it helps reorient that capital flows to those sustainable activities. And it also should help limit the greenwashing, the risk of greenwashing. It should also limit the market fragmentations on what each of us consider as sustainable. It really should unite us in that. That's the objective of the EU taxonomy. At the following slide, we are going to see the main eligible real estate activities under the EU taxonomy. There are more activities which are relevant to the building sector. However, these three we find particularly important and material for real estate and listed real estate specifically. There is development of new building as a category, renovation of existing building, and also acquisition and ownership of buildings. And I need to say that when it comes to listed real estate and the asset owners, it is the last of those three which is the most material or the most relevant for our sector. So basically it means that when property companies are developing their new buildings in order to own them as an investment property, or when they are acquiring new or existing buildings so that they want to renovate them, or when they are holding that property to generate recurrent rental income from that property as an investment, they apply the category 7.7, which is the acquisition and ownership. Mostly. You can see on the slide also some of the highlights of the technical screening criteria. I know Stephen already mentioned some of them, but I'm not going to go into details. Of course, you will have all the slides. But what I want to highlight today is that renovation as part of this eligibility economic activities, it's not at the moment considered to be a sustainable, but rather transitional economic activity. And it does put those investments in renovations to a little bit disadvantage, I would say. So this is an area which we are looking at and which I believe will be important to address as part of the taxonomy's review. I also want to mention that the European Commission, of course, is about to adopt its environmental taxonomy, which will extend the taxonomy to other objectives, environmental objectives, which will also include transition to circular economy. However, I want to stress that for real estate markets, it's really the climate change mitigation, which is the most material, the most important environmental objective when it comes to asset owners. Thank you for that, Julie. So here are the reference to some of the requirements specific to listed property companies under the EU taxonomy, and these requirements are exactly to connect the taxonomy with the ability to attract green finance. The companies will be required to report 3 specific financial figures. And in those figures, they will be demonstrating their alignment financially, their alignment to the European taxonomy. When it comes to listed real estate, there are 2 out of those 3 which are more relevant. It's turnover and capex. And turnover figure is basically demonstrating how sustainable the portfolio of listed property company currently is. And capex is in a way demonstrating the company's plan about increasing the taxonomy's alignment, increasing their sustainable portfolio, so that they will include information about their capex plan to transform their portfolio or to acquire new sustainable buildings, and also they will be reporting annual information to what extent this was materialized. In terms of OPEX, it's also a requirement for the companies to report, but we found it not as relevant as the other 2. The situation when it comes to reporting will be different when it comes to property development companies. For example, they do develop buildings with the objective to sell them, so their turnover is mostly generated from the sale of the buildings. The turnovers of listed property companies is mostly generated from the rental income of those buildings which they own within their portfolio for a long term. Just wanted to highlight that the difference. And now I would like to also mention what could be the role and what has been the role of EPRA, the organization I represent, in supporting the sector with the EU taxonomy application. And firstly, if we move to the next slide, firstly, I would say that we have been working on a number of tools to support our members with the taxonomy applications. We can start with the CSRD scope assessment tool. The CSRD is the legislation on corporate sustainability reporting, and it defines the scope of the EU taxonomy as well. The connection between the scope for property companies, it's linked with this piece of legislation. So we were assessing to what extent and when our members will come in exactly under the scope of the EU taxonomy, not to mention that they can, of course, report voluntarily earlier if they wish so. And then we developed the EU taxonomy guidelines, and I think you have the QR code, on the previous slide. Yes, thank you. For every single of those tools, those are accessible, so you can access them. The EU taxonomy guidelines, which is a practical tool for the companies to use when they wish to understand, and we wanted to basically extend the knowledge and experience of our members, and we work together with the selected number of our members on these guidelines under the wings of our in-house sustainability team. And we also produce a taxonomy specific webinar, which is available for everyone to watch from the recording. If you move to the next slide, please. This is a piece of information I've already mentioned, but I find it really particularly important to communicate with policymakers in a way that we also educate them about the markets, about the different market participants, different business models, so that they can develop those policy initiatives and legislation in a way that they support the growth of those businesses and they support their transformations in the right way. So we've dedicated this year to this initiative as well, and we are going to prepare a more education around the European elections next year, because we will see a lot of new people coming in European politics, so it will be particularly important. And finally, and I will only repeat how grateful we are for this collaboration with World Green Buildings Council. It is our joint initiative, and it's additional layer to what we have been also doing so far in supporting our members with the taxonomy application. And I need to say that it's such a joy to work with you and with the extended network of the national building councils that you are having, because it's particularly important for those investment property companies and also investors who operate across borders to understand what exactly the EU taxonomy means within the national context. So we need to understand those national requirements which differ within the European Union quite significantly, and what is considered to be a green building under the EU taxonomy in the Netherlands, it's not exactly the same in Italy. So this is a partnership which will help all of us to understand exactly that differences. So I think I will stop here, and of course I'm ready for any questions that may come now or later in the Q&A session. Thank you.
Thank you so much, Jana, for sharing at least some of the insights on the work you do within your network. So there are a few questions. Maybe if I pick one, since you represent kind of a large member space, I believe you have 280 members. Is there any kind of best practice from one of your members? I'm pretty sure that there must be a few on kind of integrating ESG and sustainable real estate developments in existing activities.
Mm-hmm. If it's not directly linked with the EU taxonomy application, because this is something that we will be monitoring throughout this year and the next year, I would like to highlight that our members and also, so due to the efforts of the Sustainability Committee and the Sustainability team at EPRA, has dedicated quite a number of efforts to produce their sustainability reports and to make the ESG data available to public. They do disclose the information about their actions on sustainability publicly in the annual reports. And EPRA has worked for over a decade on developing a kind of standard on sustainability reporting. We call it EPRA Sustainability Best Practice Recommendation, which is assisting the members to understand what's material. And also we collaborate on this exercise with their investors. So it's kind of like communication with investors, to listed property companies, and with the businesses themselves to understand what's their wish for sustainability journey and how best to explain that in public information. We will also have awards which will be communicated in September at EPRA annual conference on outstanding contribution to society, and I will be very happy to share those examples which will be coming through, because it will be exciting to see those practical projects indeed.
Thank you so much. So more information to follow. Great, thank you so much. I will move on to our next panelist then, who is Hanan El Hayek. She is the head of sustainable finance at Certivea, and Certivea is the certifying body of the French Green Building Council, Alliance HQE-GBC. So please, the floor is yours. Tell us a bit on your experience in the French market on kind of updating and aligning your certification practices to the EU taxonomy and wider sustainable finance legislation. You're still muted, Hanan.
Good morning, everyone, and thank you for attending this webinar today. So for the next 15 minutes, I will be highlighting the role of green building certifications, and in particular HQE certification as a tool to help you face the EU taxonomy challenges. So I will start with a very quick introduction. Maybe the next slide 3, we can move on to slide 3. So Alliance HQE is actually the Green Building Council of France. HQE, to those who don't know it, stands for Haute Qualité Environnementale, which means the high environmental quality. And it's the GBC that owns the HQE brand. So it's also the role of the Green Building Council, among others, to set up the frameworks for the certifications. Certivea and Cercal, on the other hand, are both certifiers. We at Certivea, we are in charge of commercial buildings, all typology, infrastructure certifications, and neighborhood certifications. And Cercal is in charge of individual and collective residential buildings. And as certifying bodies, we develop the rating systems, we manage the certification requests, the certification procedures, and of course, we finally issue the certification. So we can move to the next slide, please, Julie. We are a non-profit organization recognized as a general interest, and we are a member of the World Green Building Council. Certivea is also a non-profit at the service of the public interest. We are the leader in France, who is today the leading country in Europe for green building certification of commercial buildings, and we are active in 26 countries through a global network of partners. Now, next slide, please. Next slide also, please. Yes, thank you. Now, you, of course, all heard about the green building certifications. You probably worked with them. Now, I just want to circle back to the basic definition of a green building certification. Green building certifications were used since more than 2 decades to assess buildings meeting certain sustainability requirements or standards. And in other terms, setting a standard, which was actually allowing a mitigation of greenwashing in the real estate since years. And it was also helping to also connect finance and sustainability. Going back to what Jana just said, it was connecting finance and sustainability specifically in the real estate sector. Green building certifications are a procedure where a third party provides assurance that the building is compliant. So we always also had this auditing framework, this assurance framework for the green buildings, or for the built environment and for the real estate. And green building certification were actually a benchmark, always considered as a sign of quality, giving a competitive advantage, a plus that was recognized and valued by the market. And this has been ongoing since for 2 decades. Now, HQE, among others, HQE is a solid scientific and technical certification scheme. It's developed by Certivea in partnership with the Green Building Council on France and, of course, many other stakeholders. It's governed by a certification scheme tailored to a various type of buildings. And it's important just to note that the certification for sustainable buildings is accredited in France by COFRAC according to the ISO standards. Next slide, please, Julie. So HQE certification and all other certifications for that matter, they are built on a holistic approach to sustainability and ESG. So the different themes actually cover environmental aspects, social aspect, economical aspects, and even governance aspects with sector-specific KPIs. And actually, most of the indicators that are used to rate the performance of of specific credits or of specific themes in the green building certifications could actually contribute as KPIs towards ESG issues in the real estate. Now, this being said, for big corporates today, it's also becoming very common to consider the percentage of certified building as a KPI towards corporate ESG goals. Next slide, please, Julie. So now taxonomy popped up a while back, and of course it was designed by policymakers to actually create a common language, to create a common understanding of sustainability in different sectors, in different economical sectors. And one of these sectors was actually the real estate. So our first reflex was to check for a mapping between the EU taxonomy and the HQE certifications, which is not obvious at face value. I can say because, well, taxonomy is a regulation by the EU Commission. It has a mandatory framework for the reporting. It concerns, like I just said, a list of eligible economic activities, and it's actually bound to set standards for the environmental performance with a financial objective, which is directing the cash flows towards sustainable activities and fighting greenwashing, mitigating greenwashing in the market. So we were still somehow facing a new technical compendia, I'd say, of sustainable building, facing this technical framework that was already in place, and that is presented or represented by the green building certification. So our question was, how can certifications help real estate stakeholders in meeting new reporting obligations built around the EU taxonomy regulations, using the framework that they already know, that's already operational, and that's been working since 2 decades. Now, maybe Julie, we can move to the next slide. So anyone who actually went over the text of the EU taxonomy can understand the challenge of establishing interpretation. So we actually, the first step that we did was to establish interpretation to understand to better understand the technical criteria and to help also stakeholders better understand them. Then we went over an analysis on each of the technical criterion of the taxonomy to define the relevant documentation. So this is where us as auditors, as the certifiers, this was the added value that we were able to give, because we looked at the text, we understood the criteria. Now, how are we going to make sure that this set of criteria is actually met when we say that we are going to meet it? So this is why we based our strategy on also a set of relevant documentation to prove compliance. Then we went to the cross-checking between the technical criteria and of the taxonomy and the technical criteria of the HQE rating system to be able to actually map the requirements and the documentation to finally be able to establish correspondences that we today we are very sure to say that they are very solid. So maybe we can move to the next slide. And we are very happy to have been able actually to build a consensus on the French market. Well, despite the gray area, despite all the market resistance, the challenges are a whole different story. That's not our topic today. I will not go through this today, but I will just say that at the end of the struggles today, HQE certifications are acknowledged as an evidence for taxonomy alignment. And we will also like just to thank Deloitte and the Green Building Observatory of France, who helped us as well in setting this framework and in building this consensus. So now, based on all these technical findings, further to building this consensus, we developed a series of tools that can be used for certified buildings, for buildings undergoing certification, and of course, the buildings that wish to be certified. We have the self-assessment tools that allow project holders to identify if their projects are able to provide the evidence of alignment and conformity. Now, why this is important? We consider that the self-assessment tool, for example, in particular for the existing building stock that's already certified, let's say that we have a project that was certified back in 2019, and today the project owner wishes to sell this building. Now, how can the acquisition of this building by the buyer be aligned with the taxonomy? Now, this certified project, this self-assessment tool will allow this certified project today to check which of the criteria is acquired because the project is certified, and it will allow him to check the boxes to check what remains to be done in order to prove conformity. We also provide an attestation of conformity that is delivered further, of course, to auditing that all taxonomy criteria are met in accordance with the concerned activity. Now, the audit part would be to check that the criteria that was not covered in the certification is actually covered by another documentation process. And this attestation for Certivea, it's always issued alongside and complementary to the certification. So we can maybe go to the next slide, please. In a nutshell, we can say that a green building certification, and particularly HQE, will pave your way towards taxonomy alignment. So if your project was already certified before the EU taxonomy showed up, and even better if today we are it's a new project that's under construction or under renovation, or even if it's operation and management of a project, the new rating system or the new version of HQE Sustainable Building that was released back in June 2022 will allow the project to ensure a complete and total conformity with the whole set of the taxonomy criteria. Before my time's up, I will just show you very quickly the self-assessment tool. Maybe Julie, the next slide, please. So this is the self-assessment tool that's put in place for all the versions, the older ones and the new ones. It's actually an Excel sheet with the drop-down menus that will allow you to select for the operation, the level reached on each of the criteria, and it will let you know if there's conformity or non-conformity at criterion level. And the next slide, I will also show you very quickly. This is a screenshot of the digital tool that's put in place. Now, this is only applicable to the newest version that was released back in June for sustainable building, and that is totally aligned with the taxonomy. So this version allows you to actually tick the whole set of boxes for taxonomy alignment, and it will allow you to fill in the project details, to upload your documentation. You will be able to check your conformity as you go through the project, as you self-report, and then before the auditor comes and check the documentation and check what was reported on this digital platform that we call EASIA 2 for the green building certification reporting and the taxonomy reporting as well. Now I will be very happy to answer your question. But I would just like to tell you that also we have a report available for download on Certivea website. It's a free report that you can download, and that will take you through the understanding of the full understanding of the EU taxonomy criteria and framework, and of course the framework of the HQE certification and how we actually reach to this correspondence between these two compendium. And we remain at your disposal for further information. And don't be, please, now don't hesitate to reach out if you have questions. I will be happy to answer them.
Thank you so much, Hanan, for giving us these insights into your work as a certifying body. I will take one question directly. So, I mean, you discussed now what you have done at Certivea in aligning, you know, your work that existed for decades already in kind of aligning it to the EU taxonomy. Maybe now looking further from the status quo where you are now, looking into the future, what would you say would be the key priorities moving forward based on the kind of current status of work you've achieved?
Well, there are always the challenges. I think that basically the climate change adaptation remains one of the biggest challenges, especially for the built environment, for the existing buildings in particular. We are looking for ways to, of course, now we are trying to merge what we have in the certification, because it's well known by the market, and it's easier from our point of view. It's easier to start with what people know and to further expand than to totally give them a whole new set of challenges and a set of criteria to meet. So we are trying to slowly build on what has already been done for these 2 decades and how we can actually include the various elements. And of course, there's another very important item that was also aligned by Chris, which is the need for renovation and the need to further expand on what's to further, I mean, expand the existing instead of building new. And we're doing this because we also have certifications for renovation and another certification for existing buildings that don't need renovation for operations and management. And I think that will pave the way for stakeholders to start and understand further what's asked even in the taxonomy framework.
Yeah, thank you. Maybe if I circle back to Jana, there was a question in the chat before on the fact that without a green premium that's energy efficient and new buildings currently have, how can policymakers and kind of market incentives Sorry, rereading the question. So how can policymakers and market incentives kind of drive investments into renovation? So prioritizing refurbishments rather than demolishing existing buildings.
Mm-hmm. Thank you, Julie, for that question, and thank you also for Chris. I noticed that you provided an answer to that, which I find very good. What I would maybe mention here that when we look at the renovations as part of the EU taxonomy, at the moment it is not considered to be a sustainable activity, and it's a hurdle for attracting capital to flow towards renovations because of the other pieces of legislations also that work within the sustainable finance agenda. There is SFDR, Sustainable Finance Disclosure Regulation in particular, which applies to financial market participants. And as part of that regulation, the financial market participants or investors in general, they can develop certain specific sustainable products under certain types of provisions within that regulation. And we know it by Article 8 or Article 9 or light green or dark green, but in effect, one of them is sustainable. It's considered to be a sustainable product. And because of the understanding of renovations under the EU taxonomy to be transitional, it is not considered to qualify for the sustainable product, for example. So those real estate investors that are looking to transform buildings into becoming green are not going to be able to package those financial products as a sustainable products. For example, this is something that policymakers can change, and they can of course add certain conditions to that. But indeed, renovations are more challenging to do, more challenging to attract capital for. So perhaps it's time to think how to create those motivations, not only the sticks, but also the motivations to move that capital there more easily. And if I may, now that I'm speaking, if I may, there was also a very good question about what are the challenges of green finance for green buildings in general. And I also thank Chris for providing an answer to that. What I would like to add on this point is also that there are currently discussions around ESG valuations. It's not really clearly demonstrated how the ESG brings value to those investments. So this is a topic which is ongoing, and a lot of organizations, valuers are working on understanding how they could factor the ESG in the valuations of the buildings, and this could help tremendously. Also to incorporate the whole life carbon approach within the whole real estate market and our kind of thinking of real estate investments, so that it's in the DNA, not an add-on of requirements that the companies need to do or the investors need to consider, but something that we do naturally. This part will quite help significantly, so that we understand what the embodied carbon does and how we should factor it in our investment decisions. And I think Chris' presentation on that point and the project that you outlined, I think that was very interesting, particularly for that.
Thank you. And as you will have noticed, I seemingly moved towards the Q&A session of this webinar. So maybe if I get back to you, Hanan, in your experience at Certivea, so I was asking you about what you would kind of focus on now, but what would you say is kind of your role in really getting more finance flowing towards green buildings through your activities?
Now we are approaching financial institutions to also, well, it's not just us. I mean, it's now a kind of national, probably, how to say it, initiative to actually create a financing mechanism to especially categories of the society who, for example, who live in homes that need renovation. So to help them get financing to renovate their homes. There are actually many initiatives at the national level in France. And we are aiming so that the certification would also be one of the criteria that will allow stakeholders to be able to reach more financing when it's, below the EU taxonomy framework for the general financing framework that's being set today.
Thank you. Thank you, Hannah.
There's just, Julie, another question that I would like to ask, because there was a question about the alternatives of HQE in the UK and if it's an alternative to, well, BREEAM. I just like to say that HQE is also an international certification. It could be comparable to BREEAM or to LEED in the sense of the different categories and in the sense of the holistic approach, but it's not comparable to WELL, because WELL is actually concentrated on well-being, so it doesn't actually tackle all the sustainability themes and categories. We are actually the certifying body. We have international auditors, because there's also a question about assessors or bodies local in the Northwest. So we are the certifying body, and our auditors, we have international auditors who manage the audit process for projects in the Northwest and in other areas of the world.
Yep. Thanks for addressing the questions. If I circle back to Chris, so you gave a lot of insights on, what kind of tools and thinking you use in, bringing in a lot of environmental and maybe also social perspectives into your projects. What's your experience in how has this helped maybe in accessing finance? If we come back to the wider theme of this webinar on bridging kind of green money with green buildings, what has been your experience there?
Okay, so at one level, it's relatively early days for all this. Some of our bigger clients, and I have to say, like very large clients, and like Apple, have actually placed green bonds. They did this back 10 or 12 years ago for their headquarters in Cupertino, and then they also funded many of their retail developments using a second tranche of green bonds. So that's one way that we've seen it approached. There are also sustainability-linked loans, and what we are seeing, it's quite early, but we are seeing clients interested in taking out sustainability-linked loans to service the debt on their buildings. And I think one of the reasons is because it then means that whoever is giving them that loan, whoever is financing, will have to agree with them the criteria for the sustainability-linked loan. So it gives it probity. It basically means that they won't be allowed to greenwash. They'll have to meet the targets that the bank or whoever the lending institution has given them. And so if they're wishing to market the building as a green building in comparison to others, things like LEED and BREEAM and HQA and these types of things obviously help, because they're out there, there's, they're certification systems and people can see them. But, to actually say, and the money that I've borrowed for this building is actually on a sustainability-linked loan, and I've got a consortium of banks watching my every move to make sure that I meet the criteria. I think that really kind of puts, it puts the organization in a position where they do have a lot of kind of scrutiny, and therefore their performance will have to be honest, and so I think that's a we are seeing that, and the problem actually we've seen in some respects with green finance is the other way around. We have genuine evidence of seeing big lending institutions and financial institutions wanting to put 10, 12, 14 billion pounds of funding together for projects, and then only being able to place 1 billion in a year because they can't find enough green projects to actually finance. And a lot of that is the visibility of the project, it's finding the project, and another one is having a kind of being able to get through the due diligence that's necessary to place large sums of money against large capital projects. So to be honest, I don't think the problem is there enough money? I think the problem is how to connect the money to the right opportunities and to make it transparent, which is the whole idea of ESG in the first place. But that definitely is what we're seeing.
Yeah, thank you for these insights. So maybe there was a question from some time ago also on addressing some of the social aspects and not only environmental concerns. So I think, Chris, you spoke to this when you mentioned kind of also health and well-being aspects, you know, on the kind of case study you presented. Maybe from Jana or Steven's perspective, maybe you can come into also comments on, you know, your views and your kind of from your networks on these other non-environmental aspects. So maybe Jana, if you want to go first.
I was wondering who would start, but of course I would welcome Steven to also add on this point. But under the taxonomy, of course, there is not only the requirement when you focus on the sustainable investment to meet technical criteria for certain specific activity, there is additional requirements to not do any significant harm to other environmental objectives, and also there is minimum safeguards on the social aspects of the investments that the companies and the investors need to check. It's not it doesn't have a specific deep criteria on that, as social taxonomy has not yet been developed, although there has been a substantial work on that. I'm sure I will hear from Steven on how it's maybe which direction it is currently going, but it is required to take social aspects of that investments into consideration. And also a part of the question was how to ensure that it would not hinder the economic development. And I need to say that when it comes to investments, I think every investor will also be looking at how much value it can generate in economic terms, not only how much of environmental concern is addressed with that investment. It is very important for them to make sure that this investment is done in a holistic way, so it fits within all those objectives, although it is very, very difficult, of course, to make it all right. So I would just highlight what Chris has mentioned very at the very beginning. It is not about making perfect decisions. It's really to work with what we know right now and to go to that direction, because it's important to take actions already.
Yeah, thank you. And Steven, if you want to come in.
Yeah, thanks. Yeah, I would fully support what Janis just said, particularly on the role that the taxonomy can play in terms of insights on where the social taxonomy might go. So those of you following the EU taxonomy development, you'll know there was a report on a potential social taxonomy developed by the EU platform and published, I think, sometime last year. My understanding is that at this stage, the Commission is very much focused on ensuring and reinforcing the usability or improving the usability of the existing framework of criteria, and is not currently actively pursuing further development of the concept of the social taxonomy. That's not to say it might not pick it up in future, but I understand it's not currently a priority of the new platform. So there's a new expert group being convened and was launched this year. So I imagine that will be some time before it becomes, we see any further development. In terms of how outside of the taxonomy that, the sort of bringing these different issues together can happen within sustainable finance, I think the solution is holistic frameworks. So things like the certification schemes, we've heard a lot about HQE, but others have been mentioned, and they are, in most cases, multi-criteria, multi-issue, and address some of the social aspects. So that's one way that can be addressed. I think what we see very clearly is that the financial sector is very quickly overwhelmed with complexity. lenders, investors, bankers want simple metrics that are easy to access, and a certification scheme can provide that. It can provide them with a single reference point where they don't need to sort of understand the full complexity of the criteria that have been used, but they can make a reference to that single framework. So I think that's probably the best solution that we have. And just to come on to another question around, or there was a comment around in Kenya, this sort of challenge was highlighted of actually getting banks to kind of pay attention, or to appreciate the role of green buildings and certifications. I think actually bringing that more holistic dimension, so looking beyond energy and carbon, looking at some of these social dynamics, can be a way to sort of strengthen the business case, particularly when sort of talking not just to commercial lenders, but also to sort of institutional investors, and thinking about those investing in bonds and things like that. Actually, a broader framing can make them more appealing in some cases. So I think this is an important dynamic that probably needs more work, and the taxonomy is a good start, but there's definitely more could be done.
Yes, and I would absolutely agree with this, of course. Hanan, maybe bringing some more details to this, is there any kind of best practice that comes to mind from your experience? You're still muted.
There's one best practice that we came across. It's related to a financial institution, and it's also circling back to what Chris was just saying about the actual sustainability measures. So this financial institution actually set a condition for green financing, for example, to be certified, and within the certification, there was a list of prerequisites. So they actually set a minimum standard of certain credits that have to be tackled by the project owner in order to get the financing. And in this way, I mean, this is one of the practices that will allow this the financing to go towards a particular biodiversity practice, for example, or energy saving or energy performance in terms of climate change mitigation. Maybe at face value, some projects could be certified and not meet the sustainability standards, like Chris was saying, but this can always be also turned around by a certain set of additional criteria, which is today the case, for example, for in the example of the EU taxonomy, and in this practice that I just mentioned for this French financial institution, for example.
Thank you so much to bring some more concrete kind of life to the comments before. All right, then I will thank everyone to have joined today's session. Also, thank you to the great panelists. I mean, being aware of that time's up, I will maybe just make one closing remark instead of several. And just that we are seeing quite some movement in the market, and awareness is raising, but we still also observe, also from kind of our network at the World Green Building Council, we observe a lack of kind of speed and scale in the movement of change. So, how can we build on the best practices examples discussed today to make this really mainstream? I think that's really what's needed. And so in the EU market, it's really great to see kind of this large scale sustainable finance legislation movements that Jana took the time to kind of give us some highlights on. So yeah, I would welcome everyone to just get informed. Thank you everyone who joined this webinar, and let's kind of collaborate to make this transformation in the built environment happen. And please do reach out to me or World Green Building Council or any of the panelists. We're always happy to put stakeholders in touch that are willing to accelerate the movement of sustainability. Thank you all, and still have a good day. Bye.
Thank you.
Everybody.
Bye-bye.
Bye. Bye.
Thank you. Bye bye.